we all, my entire company, we all invest in gold and silver. We're the only company I know of where we're on the same side that you are. And we have a private newsletter for our customers that will tell them, it'll show where we are in the cycle, what gold's value really is, and I'm going to be telling people what I'm doing, and we are going to be trying to measure where we are, and if anybody is able to sell at the very top, and they say that if they tell you that they can do that, they're lying. If they do, they were lucky. Nobody can measure exactly where things, and nobody has a perfect crystal ball. But I believe by seeing what has happened in the past and then the fundamentals of what's going on now, we can sort of measure and sort of ease out in 20% increments around the top.
How much time do we have before deflation hits?
Well, the deflation seems like it's going to happen between now and 2012 or 13. I don't know. When people ask me, like, sometimes people ask you a price and then they'll ask you a date, and you can give a date and sometimes you're accurate. You give a price, sometimes you're accurate. If you give both, you got a 99.9% chance of being wrong at that point.
Is the only way of getting gold and silver from you is through a website?
Yeah, it's just through the website only. We only deal over the internet.
If you're starting out like with $1,000 increments, what would you recommend? Going to like spending the $1,400 and going and getting gold, or doing it and buying silver?
In the deflation.
I do both, but I like silver better. It's just that silver is a wild ride, so you got to be ready to hang on. If we have a deflation, you could see like a 50% pullback or something. When the markets crashed, silver went from 21 bucks to 8.
But if you stay with it,
well,
it still goes
879,
up, right?
I think it was.
As long as you're willing to ride it?
Yeah, but I saw a lot of people panic and sell. And I just measure, I don't care what the price is. The price doesn't mean anything. If we have deflation, gold may peak at 3,000, but the Dow will be at 3,000 or down at 1,500. You'll see the stock market crash, and gold will still purchase more shares of stock and more real estate, even though it stops at 3,000. Right now, that Dow gold ratio that I showed you, it's a cycle. And in 1929, it went, the mean, the fair value is gold should be about 1/4 the points of the Dow. The Dow's at 1,100 or something, so the gold should be almost 3,000 to be fair valued. But it's been undervalued for more than a decade. The stock markets are coming off the biggest bubble in history because gold is more undervalued in 1999 than at any time in history, and the stock's more overvalued than at any time. What we should see is a reversion that's larger, a bigger backlash than at any time in history. It's a normal thing. And so in the 20s, it was about 4 ounces. It went up to 18 ounces in 29. The stock market crashed. Gold was fixed. It was $20.67 an ounce. The stock market crashed, and in 1932, there was a day where the Dow was at 40.22 points, and gold was $20 an ounce, so 2 ounces of gold bought the Dow. Then in 66, it had gone up to 28, so it's in a big bubble again. But because it's a bigger bubble, when it reverted back to the mean, it overshot more to the opposite side. There was a day in 1980 where gold was $850 and the Dow was 850 points. 1 ounce of gold bought the Dow. So in other words, 1 ounce of gold bought 28 times more shares of stock than it did in 1966. Then we had the biggest bull market in stocks in history from 1980 until 2000, and a big bear market in gold where gold went from 850 down to 250. And gold had never been as unloved and ignored for the last 5,000 years. Gold had been some country's money. For 5,000 years, it had been the medium of exchange and the store of value. But there's all these paper assets that were created, stocks, bonds, mutual funds, and currency that sort of replaced gold. And by the year 2000, I mean, gold was completely ignored at $250 an ounce. It started to revert. It hit a peak where it took 45 ounces of gold to buy 1 share of the Dow. In other words, if you cashed out of 1 share of the Dow, you could have purchased 45 ounces of gold. Today, 1 share of the Dow is worth 8. It's a little less than 8. So the Dow is falling and gold's value, as far as how many shares of stock it'll buy, is rising. It's going to go to 1 or less, probably. I think it's going to go to like a half, meaning there will come a day where gold's price is double whatever the points of the Dow is. Now that doesn't matter if the Dow is at 1,500 and gold is at 3,000, or the Dow is at 15,000 and gold is at 30,000, or if we're in a hyperinflation, the Dow could be 15 quadrillion and gold is at 30 quadrillion. It doesn't matter. You're talking about price, and the price doesn't mean anything. It's a smoke screen so that you can't see value. And this is what we teach on wealth cycles, is try to how to see through that smoke screen and assess true value, and to be able to see I don't think that now is really the time to go into real estate until, see, we've got a basket of indicators that we are using. I can tell you a couple of them: the gold real estate ratio, the Dow gold ratio, but I can't tell you all of them, because if we disclose it to everybody, they won't work if everybody starts using them. But we've got a basket of indicators where we should be able to know when this cycle for gold is nearing an end and be able to ease out of it. And what I know is that we're nowhere near the end yet, but what I'm intending on doing is going back into real estate, and in a big way. Gold and silver don't do anything. They don't spin off interest. It's not a cash flow item. It's a lump of metal that just sits there. I am not attached to, I don't have any attachment. I've got a big investment in gold and silver, but there's no attachment.